stop loss. This increases trade volatility and is recommended for experienced traders with lightning or high risk mode enabled. Swipe, trade executes instantly, no confirmation needed. That's how simple trading on Rift is. From opportunity to execution in just one gesture.
General disclaimer. Welcome to this official presentation on Affiliate Marketing Model 3.0. All presenters are providing their services on a volunteer basis and are active participants in all products they are presenting. Their views and opinions do not necessarily reflect those of the organization. While we aim for accuracy, errors may occur. All content is for informational purposes only. The information provided is general and not personalized advice. We are not liable for any losses. We provide information and systems, but we do not endorse any purchases of memberships. Your decisions are yours alone, so we advise conducting thorough research. If uncertain, seek guidance from a qualified professional. Attendees accept these terms by continuing to view this presentation. Let's explore affiliate marketing cautiously and curiously. Legal disclaimer. You are viewing an Affiliate Marketing 3.0 official presentation. All products and services, their component parts and operating methods and systems, either provided by or created by Affiliate Marketing 3.0, belong solely to Affiliate Marketing 3.0. All IPs are protected. Anyone copying, distributing, or reselling any Affiliate Marketing 3.0 product without express permission risks serious legal consequences. Any unauthorized broadcasting, live streaming, or social media sharing of Affiliate Marketing 3.0 presentations is strictly prohibited. Downloading and re-uploading presentations without permission violates copyright law and may also lead to legal consequences.
Hello, everybody. How is everybody doing today? Welcome to 3FO presentation training today. Today, we're going to have Chavez continue his training for us. And while we wait for him, let's get ready for this fabulous training because it's just fantastic, but there's a lot of information. So let's pull out our notebook and our pens and get ready to take notes. The other thing is that we have plenty of room for your teammates and for your associates, your affiliates, and network. So bring them on, and so that they will be able to get this training firsthand. My name is Grace, and it is my pleasure to welcome all the leaders that's on this call and everybody who is a leader in their own right. Of course, that means every single one of you. Thank you all for being here. Now, while we wait for Chavez, Sheba Joe wants to share some information with us. So, Sheba Joe, thank you for being here.
Good evening, Grace. Good evening, everybody. Yes, in our continued efforts to make sure that nobody is losing funds during transferring, we're just going to reiterate some information we shared over the last few days. So there we go. Okay, so hopefully that can be seen by everybody. So just to try and help create a division between the two platforms, 3FO and Rift. They both use USDC, but on different networks. So in this situation, this is 3FO, and we are talking specifically for the purchasing of Rift licenses. The ignition packs and the other panels are bought with Ethereum. But this is specifically for the purchasing of Rift licenses. Remember, we are operating on the base network in 3FO, and you are depositing USDC. So you need to go to your portfolio and look for your USDC deposit wallet and activate that, and you will get the address, and you're going to deposit using the base network. Very, very important. If you send USDT on the base network, it will be lost. If you send USDC on any other network, it will be lost. You have to send the correct token, which is USDC, on the correct network, which is base. You can buy USDC and send on the base network on, I would say, probably 90% of exchanges or DeFi wallets. But there are one or two places that don't use base, but most do. Certainly these that are listed here do. So remember, you're buying USDC in your exchange or DeFi wallet. You are sending USDC on the base network to your USDC base deposit address in 3FO. On Rift, you're using the Arbitrum network. Now, that's not a choice that Chavez made. That is how the Hyper network works. What's it called? Yeah, Hyperliquid. That's how Hyperliquid work. On their own exchange, they've integrated a bridge so that anybody can send in USDC on the Arbitrum network, and we are utilizing the same system because that's how the Hyperliquid blockchain is set up. So you're sending USDC again, but this time on the Arbitrum network. So this is to send into Rift for the purposes of manual trading or using the auto trading engine. Again, Arbitrum is accepted pretty widely on most exchanges and DeFi wallets. And you're buying USDC from your exchange or wallet. You are sending using the Arbitrum network to your Arbitrum address. You click the hub, go to wallet, click on deposit, and it will give you your Arbitrum deposit address. It's very, very important that you don't get these mixed up. Now, this slide I have put in the leadership group. So all of the ranked leaders have this slide. So if you feel that this would be useful to you, whenever you're depositing, you can bring it up on your computer and just refresh your memory. Then reach out to your upline ranked leader and ask for this. And then you can just keep this on your device. This will help you to remember exactly what you're sending and what network you're sending it on and where you're sending it to. Now, I will also share, since I'm here and Chavez hasn't yet arrived. Let me delete that. Let me also share this. Is my Telegram channel visible?
Yes.
Okay, so something that launched a few days ago is the new menu on Telegram for your Rift data. So if you open your Rift channel, this is where you would click open to open up your Rift account. If you type in here, / menu, and then just hit enter, it will present you with a menu of options: dashboard, balance, referrals, analytics, streak, settings, profile, earnings, engine, level, payouts, and help. And all of these options here will give you data on your Rift account. So if there's anything you need to know, if you want to know about your dashboard here, you can click on that and it will give you some information here. And then you just click.
Chavez is here. Sorry to interrupt. Chavez
No
is
problem.
here.
Thank you. If you just click back on the menu and it will bring you back, and you can click on any of these to give you additional information. Okay, let's go over to Chavez. Let me just quickly co-host you.
All right.
There you go, Chavez. You are co-hosted.
Well,
Hello.
welcome, Chavez. How are you doing today?
Thank you, Grace. Very well. How are you?
Fantastic, fantastic, and so good to see you. Looking forward to the next episode of training that you're going to go ahead provide us, everyone. And just in case there's a couple of new people on here who are not acquainted, Chavez is really not a person who requires an introduction, but it's always nice to make sure that you're well acquainted with him. And he is our CEO for 3FO, Rift, and so many things that he is bringing and developing to bring to this community. Chavez is globally and internationally recognized as an expert in digital um, and this blockchain economy. And he is a frequently sought out speaker, and he was going to be going to India to a very important Unchained Summit conference towards the end of this month. But one of the things that is wonderful about Chavez is his willingness to share what he knows with us. And not everything, okay, because we will be completely overwhelmed, but the way that he is able to convey the information is both educational and fun to learn. So, Chavez, thank you so much for being here.
Thank you so much, Grace. Welcome to UK Prime Time once again. I hope everybody is doing good. Today we are going to enter into episode 8 of Rift Before You Quit. So take out your pen and papers if you all are making notes. If not, then please listen carefully. Let us get going. So today we are going to mainly focus on rise of AI-driven market infrastructure. Why human-only trading is becoming obsolete. We will understand the whole uh, decline of manual trading, why is it happening, from when it is happening, from data, from market survey, from numbers, and then we will understand what is the future of trading, or what is the trend and what is coming next. The biggest financial shift in markets is no longer happening on charts, it is happening inside the infrastructure. So, in the previous episodes, we explored execution architecture, psychology traps, structured participation, capital scaling, flow diversification, system driven trading behavior. But tonight, we discussed one of the most important transitions in modern finance, that is the rise of AI driven market infrastructure. Not hype, not science fiction, real systems, real execution environments, real institutional transformation. Because the reality is simple, the market is no longer dominated by humans reacting manually, it is increasingly dominated by systems reacting structurally. The market has already changed. Most retail traders still believe markets are primarily driven by humans staring at charts. The world is disappearing. Now the edge is not in signals or information or uh, first hand knowledge of the movement or momentum of the market. The edge is in structure, the edge is in execution. I have been pressing on few fundamental concepts on which around which Rift is built, especially auto trading engine is built. That is repeatability, that is consistency and structured execution. And when we talk about all these factors, the very first thing that comes to our mind or anybody's mind is the institutional traders or structured professional traders. Why systems they dominate, and what are the systems? Why trading systems are basically dominating over manual trading or humans trading manually. Let's take real market data. According to estimates from JP Morgan, New York Stock Exchange, Market Structure Studies, Coalition Greenwich research, more than 70 to 80% US equity trading activity now involves algorithmic execution influence, not humans, systems. Uh, so today we are going to deeply learn and understand what are these systems and why do they uh, continue to consistently succeed over manually trading humans. The market evolved faster than most participants realized. This is the participation graph of algos, or you can say system driven executed performances or algorithmic system execution versus human discretionary trading. If we look where it all started, when it comes to algorithmic systems, the market share from 2000s, early 2000s was 12% of algo based trading, and around 88% was manual trading. And it kind of confluenced in 2013, um, and market share was almost the same for both algos and humans or manual trading. So we can see from data, and this data is from TCA, SEC, BIS, JP Morgan, McKinsey Global Institute. This is the relied studied data which is researched, and the sample sizes of this data is in millions. So this is something which we can rely upon in terms of understanding the um, uh, curve of manual participation versus algorithmic market participation. We can see from early 2009's HFT expansion increased, where the high frequency trading came into a little dominance, and algorithmic trading took the market share up to 35% out of whole. And during 2013, um, the automated infrastructure started to dominate, and post that quant dominance started, where factor investing and alpha cycle was introduced in algorithmic trading post 2016, that was around 2017. And then 2000, late after 2020s, retail fragmentation started, retail flow internalized, and payment for order flow kind of began, where people uh, started shift, even retail traders started shifting towards algos. There were many companies, many bots, many algos which were selling openly in the open source codes in the market, and usually manual traders also purchased these algos and they deployed using their centralized or decentralized exchange accounts. So that's where market moved towards the automation. And at this point in 2026, we see domination of algorithmic based automated trading up to 92%, not automated trading, but algo based market participation, 92% out of whole. Whereas if we talk about human or manual execution, it is currently standing at 8% of the total trading activity in the whole industry, be it crypto, be it stocks, be it forex, be it commodities, everything. So, key takeaway of this curve is algorithmic execution has shifted from the fringe to the foundation of markets. Now, algorithmic systems, they dominate the market with more ease, more structured execution. Um, and that is why the edge is not in getting the first hand information, the edge is not in signals, the edge is not in information. The edge is in discipline, structured organization, structured execution, and consistency with repeatability. Modern markets now operate through execution engines, quantitative models, liquidity algorithms, AI assisted infrastructure, and predictive systems. Human reaction alone is becoming structurally slower. Why manual trading struggles today? Retail traders are competing against machine speed, institutional liquidity systems, predictive execution models, high frequency infrastructures, and most don't even realize it. Let's take real market example. The forex market operates in microseconds, whereas institutional forex systems react within milliseconds, process huge liquidity data instantly, and rebalance exposure automatically. Meanwhile, retail traders they hesitate emotionally, manually calculate entries, react after movement begins. The delay between human reaction and system execution is now a competitive disadvantage. And that is the reason why you see this curve declining and this curve increasing, and eventually it is going to completely take over the whole market trading industry with algos. Later, it will become very difficult or it will become totally obsolete to trade using uh, particular, uh, you know, manual trading, or fundamentally trading using without algos will become nearly impossible. Why manual trading struggles today? Um, okay, let's come back. Uh, Human latency versus system execution. Speed, precision, and advantage. If we look at a particularly defined architecture in which market data streams, we are not talking about Rift here, we are talking about system execution, how these automated systems, how these algorithm based execution systems they work, and how they are able to, how they basically took the whole trading industry slowly, and of course because of the structured execution. So it includes market data streams where the data comes from, and then execution of signals, post liquidity routing, and then allocation, and then monitoring post trade analysis. um, the market data streams are unified, normalized, in real time. The execution systems are simply automatically analyzed and scored, and then the execution is triggered. At the liquidity routing, the optimization, route, and execute is all managed and handled by automated algos, which when brings the execution towards final conformity of the transaction, and post conformity of the transaction is monitoring and then exit, and post exit is post trade analysis, and everything happens under 10 milliseconds. That is end to end latency of a single uh, signal to execution of whole trade life cycle, and everything happens within that period of time. Even if you say milliseconds, it takes, I believe, 10 milliseconds to say milliseconds. So before you say milliseconds, word milliseconds, the whole life cycle is completed. So you can understand what you are competing against. And these systems they possess lower slippage, better prices, higher fill rate, more certainty of filling the trades. Then there is capital efficiency, maximize returns, and their operational scale, because 24 hours execution is available in these machines. These are not humans, they don't work on discretion, they don't sleep, they don't get tired, they don't get emotional. There is no slow decision if we compare to the human latency in terms of manual execution of trades. So speed, precision, and advantage is institutional edge in every millisecond. So this is why the automated systems or system execution is kind of taking over the whole market, whole trading diaspora slowly. So what AI actually does in modern markets? AI in finance is often misunderstood. People imagine prediction machines, but real power of AI infrastructure is pattern recognition, probability adaptation, execution efficiency, behavioral analysis, and speed optimization of the system. Let's take market example of Renaissance Technologies. We are taking this example, I think, second time in our webinar. Um, One of the most successful quantitative firms in history relied heavily on mathematical models, data pattern recognition, system execution, not emotional chart prediction. Modern systems do not need certainty, they need statistical advantage combined with disciplined execution. The real power of AI is consistency. Humans become tired, emotional, impatient, distracted, but systems, they don't. Real behavioral finance fact. Studies show human decision quality decreases under stress, volatility, financial pressure, sleep deprivation. This is critical in fast moving markets. We already discussed a whole chapter, whole episode of human psychology and how human brain responds to profits and losses, everything we discussed. I think you guys can relate. This chart again shows or revises what we discussed in the psychological impact of winning and losing in trades. So performance under pressure, how it declines. Same thing, fear of missing out, fatigue, overconfidence, then panic, then it kind of deteriorates the human decision quality upon various different circumstances because of stress, time, volatility, exposure, and discipline wins. If there is discipline, and that is why the AI systems or system which is structured system, they always become win because of being stable, consistent, and unaffected by emotion. The advantage is consistent processing, no emotional bias, 24 hours, 24/7 stability, and repeatable outcomes versus human vulnerability, that is emotional reactivity, cognitive degradation, bias amplification, and inconsistent results. So, and consistency is a key compounding edge. Systems don't feel pressure, they perform through it. That is why structured systems outperform inconsistent behavior over time. Why now let's come back to Rift Auto Trading Engine. How Rift Auto Trading Engine fits this shift. Rift is built around this exact transition, not around manual reaction, constant monitoring, or emotional execution, but around structured participation architecture. Rift combines flow diversification, structured cycles, automated participation environments, capital distribution logic, system driven execution behavior. Rift do not replace intelligence, it attempts to remove inconsistency. That is the reason we have three flows, and the allocation is basically diversified into three flows, and these three flows, they work hand in hand and they bring uh, subsequent profits. They strive and hunt for the profit regardless of different market conditions, and these flows, they work in different efficiencies. They bring different sort of trading behavior and risk profile, risk to reward ratio, everything, volatility exposure. And that is the reason why the future belongs to this system, this auto trading engine that we have built. So let's understand why the future belongs to systems. The next generation of financial infrastructure will not operate like traditional trading apps. It will operate like adaptive execution systems, intelligent capital frameworks, AI assisted participation environments. Let's look at real industry trend. Uh, if you check in the news, you can also find that BlackRock also did AI integration. Goldman Sachs introduced quant expansion. Then, trivially, almost all hedge funds are now using algorithmic, scale in terms of execution of the or accumulation of wealth and capital preservation. Uh, and then institutional AI adoption in risk management is heavily done by hedge funds, by professional trading houses, by various exchanges as well. The financial industry is not moving towards more manual participation, it is moving towards more intelligent infrastructure. The difference between AI hype and real structure. There is huge difference between marketing AI and building execution infrastructure. Real infrastructure requires data handling, risk systems, capital allocation, execution logic, volatility adaptation, liquidity awareness, not just signals. The future winners will not be platforms with loudest marketing. These will be systems with strongest architecture. Why retail participation participants will still struggle. Most retail traders operate through emotional execution, isolated positions, random leverage, reactive decision making. While markets increasingly reward structured allocation, systematic participation, execution consistency, adaptive infrastructure. This is the real evolution gap that we can draw because we have auto trading engine in our hands. Rift brings you institutional edge through structure, system, and scale because it is built around AI layers, allocation logic, structured cycles, capital flow systems, then execution infrastructure in which there is mapped order routing, there is execution quality analytics, there is low latency connectivity, and which gives you an outcome, systematic process, consistent execution, lower risk, higher return, capital growth, and sustainable edge. This gap isn't talent, it is structure and evolution from reaction to execution. And that is the reason we sit on very low risk profile in terms of risk to reward ratio as a system. The future of capital participation. The future of market is not human versus machine, it is human intelligence supported by structured systems. The winners of the next decade will not necessarily predict better, they will execute better. Let's simplify everything we covered tonight. The market has already evolved. Algorithmic participation dominates, execution speed matters, consistency matters, structure matters. The era of purely emotional manual participation is fading. The next era belongs to intelligent infrastructure, structured capital systems, adaptive execution environments, and Rift was built around this reality. The future of finance will not reward the loudest trader, it will reward the most structured system. In the next episode 9, we will start with learning how institutions, how professional capital reality really operates behind the market. The topics that we will cover will be hedge fund positioning, institutional risk management, smart money behavior, liquidity hunting, portfolio balancing, capital protection systems, why retail thinks differently than institutions. Thank you so much for joining episode 8. I will see you in episode 9 on Wednesday.
Wow. Um, Chavez, thank you very much. Sheba Joe has his hand up quickly. So I know he has some questions. I have a couple of questions myself, but Sheba Joe, please go ahead.
Thank you very much, Grace. Chavez, another excellent lesson. Very, very well worth being here for everybody that has missed, that isn't here. They don't know what they're missing out on. In there, you are talking about the possibility in the future of trading by people becoming obsolete.
Mm-hmm.
If all trading is going to be done by machine, let's say machines, if it's going to be all done and driven by AI machines, how
Mm-hmm.
will that affect the the volatility within the marketplace? Because isn't it human behavior that is creating that the volatilities, the highs, the lows in the marketplace?
uh, the highs and the lows are not just dependent on human behavior. There are, n number of factors that affect that kind of impact the market. There is news, global events, then there is um hype,
Yeah, of
news
course.
built
You know,
up. I mean, there are millions of factors which affect the market and volatility, and the machines, these algos are going to play on it. And the edge, that's why we are saying the edge is no longer is in first hand signals or information. The edge is in execution, because everybody has, if you are sitting on fast internet of 1 Gbps, I'm also sitting on the same lease line. I can also access the same information as fast as you. But if I'm able to process that information and execute before you, I'm going to win.
yes.
How am I supposed to win if I have a good algo that maps the information and executes according to the discrepancy that it has predicted or mapped?
Okay. So when, because obviously, you get news reports, this has happened in this country or this company's doing this,
Mhm.
and that creates the volatility in the marketplace. But that volatility is ultimately CEOs and people. It's people that are responding to those news
Of
reports,
course,
right?
of course, of course, correct. And that doesn't mean the whole human, because these algos, these automated systems are also controlled by humans. And and we're just talking about trading. We are not talking about accumulating, buying and selling.
Right.
Panic selling of tokens, in stupidity, in emotion, in rage, in uh, you know different other
Yes,
sentiments
yes.
never stop. It will always be in the market.
It'll always
If
be there.
Bitcoin, yeah, if Bitcoin faces a drawdown of, let's say, 50%, there will be huge wave of panic sellers that will be in the market, and the algos are going to make billions out of the emotions of you know innocent, emotional panic sellers.
Yes. Yeah. Brilliant. Thank you very much. Thank you. I don't have any other questions.
Mhm. Yes, Grace.
You're muted, Grace.
You talked about as far as a strong architecture, and before you had shown us a financial architecture that was specific to Rift. Is that what we're talking about, or what is the architecture? What does the architecture encompass when you're looking at the future belonging to systems and those systems having a strong architecture?
Um, See, Grace, systems, I mean, when we talk about a system or algo, it is not necessarily or particularly a system where many users are plugged in. It can be one algo built by a developer and handed over to a trader who is trading. So it is not always, because our case is different. Our whole understanding towards system or plugging into a system is very, very different. Our approach is always scalable because we are thinking in macro level, in masses.
Mhm.
So it is not necessarily be the case, or eventually results in every single situation. You understand? It is going to be different behavior with different aspect of running that system, and it can be in millions, it can be variably in thousands.
Right. And I mean, it's the simplest system that I know of, and I guess it's the kind of the basis of the structure is input, process, output.
Mhm.
Okay, so if you have that being the basis, how do you differentiate the architecture? Is it in the speed of ability to execute, or the different processes it has to go through?
Not
What
just
makes
speed, but yeah, not just speed, but overall discipline, I would say. Discipline includes speed is one of the factors that
Mhm.
comes in the ambit of discipline. Uh, it includes repeatability, it includes
Okay.
consistency, it includes the use, it includes you know ability to not emotionally make decisions. That's discipline according to me. And I
So
think
it's
machines cannot be compared with uh, you know discipline when it's compared to humans.
Okay. So in this architecture, we're going to be the things that you're teaching us is the many factors that go into this the architecture and this and the impact on the processes
Right, right.
and the discipline. Great. Now, if human intelligence is going to be supported by structured systems, what happens to the basis or foundation of capitalism? Capitalism, a lot of folks see that it is the motivator for us to be able to continue to create capitalism to, yeah.
Exactly. It will definitely, the idea and definition of capitalism has been updating or has been, uh, you know, shifting as a paradigm from ages and centuries. Earlier, you know, it used to be, bulk of yellow gold bricks. Now it is bitcoins in your wallet, and in future maybe it would be strong algos,
I see.
or it may be, something else. We never know. I mean, who thought a digital asset created on blockchain can do this much damage to the or disruption to the whole economical system? There may be something else that AI may invent or bring, you know.
Wow.
Mhm.
Wow.
Well,
Okay.
isn't that quantum computing the next stage of what we're in now. We're moving towards quantum computers now, aren't we?
Of course we are. And there's a threat also to the blockchain.
Yeah, there's quite a
Incredible.
few articles that talk about the possibility of quantum
Hacking.
computing being able
Uh-huh.
to break the Bitcoin blockchain.
Of course, there is. But I do not agree with that because I still believe uh, hacking Bitcoin will be as expensive as per Bitcoin. So it won't be profitable option to do that. So,
Just because you
and
can,
there
it
are
doesn't
people,
mean they will.
and there are people like me who are ready to buy 21 million Bitcoin in $1 a coin. There are a lot of people who are ready and will be ready always. So, um, quantum computing can potentially, bring a possibility, but I don't think that is something going to dominate over blockchain technology or cause a threat towards it because safety and security of a blockchain ledger is something that requires also a lot of efforts to breach. I would say more efforts than solving the um, complex difficulties that it takes to mine a Bitcoin would be required to break into Bitcoin block. And that would come with a cost, and the cost would be higher than a coin. So who would do that? And that's why no hackers they get close to Bitcoin.
Well, that's assuring. Reassuring at the very best, at the very least, I should say, very reassuring.
Mhm.
Because right now we're really the Bitcoin is the new gold and Ethereum the new silver.
Course. And otherwise, I mean, of course, there is a threat always. Even Grace, if you, I mean, it's funny, but one episode of Simpsons, showed that Bitcoin gone zero. So there is always a threat. You never know.
Not in my lifetime, hopefully. No, no, no. We're wanting it to go up. But that's the Simpsons, okay? That's great. So Chavez, thank you very much. As far as um the information that you're providing, this training is just absolutely fantastic. It takes us from it takes us out of our day-to-day churning to be able to expand our